Hey everyone, welcome back to Corporate Decoder. Today, G.E.E Group Incorporated just filed a Form 8, and I'm seeing a big shift in their board structure that could really impact shareholder power. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making a deal to declassify its board, meaning directors will no longer be elected for staggered multi-year terms, and I think this could speed up changes. Alright, let's dive into this filing from G.E.E Group Incorporated, which you might know better by its stock ticker job on the Nice American. The big news here, as revealed in this 8K filing, is an agreement they've struck with an investor group called Star Equity Fund. LP, this isn't just a minor handshake deal. It is a cooperation agreement that is set to change how the company's board of directors is elected. So what does this actually mean for shareholders right now? G.E.E Group's board is classified, which is a fancy way of saying only a portion of the directors are up for election each year. Think of it like a relay race where only some runners change at each baton pass. This makes it really hard for shareholders to make wholesale changes to the board all at once. However, this new agreement is going to change that. Starting with the 2026 shareholder meeting and fully by the 2027 meeting, the board will be declassified. This means all directors will be elected annually. This is a pretty significant win for Star Equity Fund and any other shareholders who want more direct control over the board's composition. It means if shareholders are unhappy with the direction the company is going, they can potentially replace the entire board much more easily at the next annual meeting. In exchange for this board declassification, Star Equity Fund is agreeing to back down from its plans to nominate its own candidates for the board and stop its campaign to influence the upcoming shareholder meeting. It seems like a classic activist investor move where they gain concessions on governance in exchange for calling off a proxy fight. This kind of agreement can be a good thing because it avoids costly and distracting battles at annual meetings. Now, there are some interesting voting stipulations here too. Star Equity Fund has agreed to generally vote with the board's recommendations. However, they have some outs. They can follow the advice of major proxy advisory firms like Institutional Shareholder Services or Glass Lewis if those firms disagree with the board. Unless it is about electing or removing directors or the company's executive pay, they also retain discretion on extraordinary transactions and changes to the company's articles of incorporation, though they have to stick with the board's recommendation for any article amendments at the 2026 meeting. This gives Star Equity Fund some flexibility, while still showing commitment to working with the current board on most matters. The agreement also includes standstill provisions. This is standard stuff in these types of deals. It basically means Star Equity Fund agrees not to be a nuisance for a period of time. They can't solicit proxies, encourage others to sell shares, with some exceptions, or buy up too much of the company's stock in this case. They are capped at owning more than 7.5% of the outstanding shares. This is designed to give the company some stability and prevent Star Equity Fund from launching another aggressive campaign shortly after this agreement. This cooperation agreement isn't meant to last forever. It has a specific termination clause which is tied to the timing of the next shareholder meetings. It will end either when the window for shareholders to nominate directors for the 2027 annual meeting opens, or 120 days before the 1-year anniversary of the 2026 meeting, whichever comes first. This provides a clear endpoint for the terms of this agreement. Beyond the cooperation agreement itself, the filing also mentions that on the 21st of August 2026, the company issued a press release announcing this deal. This is typical practice, letting the market know about significant agreements like this. And of course, the full cooperation agreement is attached as an exhibit labeled Exhibit 10.1. If you want to read all the nitty-gritty details, that is where you'd go. There is also Exhibit 99.1, which is the press release they issued about this. Finally, the report is signed by Kim Thorpe, the Chief Financial Officer of G.E.E Group Incorporated, dated the 21st of August 2026. Now, looking at this filing from G.E.E Group Incorporated, the key takeaway is the move towards declassifying the board. This is a governance change that typically empowers shareholders more, making it easier to effect change. Given that G.E.E Group has a market cap of around $27 million and a stock price that has been hovering around $0.25, shareholder influence is definitely something to watch. Historically, companies that make these kinds of governance changes often do so under pressure from activist investors, and this seems to be the case here with Star Equity Fund. It is a positive step for shareholder democracy, but the real impact will depend on how the board operates under the new annual election structure and whether management can deliver improved performance. The risk I am watching is whether this governance change leads to more stability or more frequent activist demands that could distract from operations. What I'm actually looking for is how this impacts future earnings and operational efficiency. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.